Good morning. So I woke up to find that the market has dropped about I don't know, I think it's 300 points today. So we're gonna call this update, I don't know, October. As you see, FAS is down to 56. It was 55 earlier. The RSI is currently at 27. So it's not 100% buy, but it is fairly low. And so I want to jump on top of this as quickly as I can. And I think I'm going to go ahead and purchase some more FAS shares. And I need to quickly figure out exactly how many shares I can purchase. Alright. And so I'm going to dollar cost average down. Okay, so as you can see, I currently own 80 shares. Okay, for the same amount of money, I can now buy 92 shares because the price has dropped. And as you see, the price is currently 56.10. I'm not going to really play around with trying to, get it much cheaper than that. Looks like, see here, Yahoo Finance has it at 56.02, and RSI still 27. So again, like I said, it's not a perfect buy, but it is roughly at 20, which is 100% buy. So once I place this order, I'll go back and show you kind of where we've come from. Alright, so we got the order in, and let me go back and show you kind of where we have come from on this thing. Let's see. Activity. Alright. Okay, so here we are. If you remember from our last video, we purchased 880 shares of FAZ. We got them at $9.07, and we were able to sell. The entire position, 1,700 shares roughly, at $11.16. When we sold these shares at $11.16, the RSI for FAZ was somewhere in the neighborhood of 82, I believe. So again, I don't play around with trying to time the market perfectly. When I have a sell signal, I sell. When I have a buy signal, I buy. Simple as that. So as you can see, the price ran up to 11.45. Now it's going all the way up to 12. So did we miss some money? Yes, we missed some money, but we never cry about missing money when we made money, right? So what's happening here is what usually happens. The market has dropped, and it's gonna stay at the bottom for a little while. Currently, like I said before in the last video, there are conversations around inflation. There's conversations around whether or not the interest rates are rising too fast. We have another interest rate hike happening in December, possibly. The Fed is not supposed to look at market activity to make decisions on whether or not they raise the interest rate. But with the let's see where we are here. S&P 500 with the market reacting like it is, it's really kind of hard not to. You know, that's just the truth. So they're probably going to take a look at the market and decide whether or not they're going to raise interest rates or not. In the last video, I talked about the S&P 500 going down to 2,700. It hasn't quite gotten there yet, but that's where I'm thinking that this thing is headed, and I think we're gonna bounce off of 2,700. And let me pull that up for you here. No, I need about 3 months out, and this thing is only giving me 1 month. No, this is a whole year, isn't it? It's gonna be hard to see. Here we are. So this is the line that we're looking at, okay? Roughly 2,700, okay? Looks like 2,640 is the lower limit. And I'm looking for the SP 500 to bounce off of that line. If it does not, the next stop is this roughly 2,500 here. Uh-oh. Here we go. Roughly 2,500. And what that is basically the previous high. Okay, that was August 2017. Let's see if we can bring this out some so we can really get a good look. Why I'm having such a hard time with this. There we go. That's a little better. That was gonna be kind of harder to see. But as you can see, we had this big run up in the S&P, right? 21, 2360, roughly 2,500. This was the top before we went flat, and what that simply means is that we had a lot of buying, right? Just now here, you know, this 2170, that was back in 2016, but we had a lot of buying, right? Just a lot of buying, a lot of people buying, and then right here at roughly 2470, we went flat for a full month, okay? And what that typically means is people stopped buying, okay? People stopped buying. They were fine with the price there, and then something happened in August of 17 to create this big jump up here, okay? And so what we typically see in situations like this, and see, we see another flat line here where we had a lot of sell, and then we got here to 2640, and people were like, oh, well, that price is okay, and we stayed there for about a month. So typically what we're gonna have here is we're gonna have the price go back to a price that people were okay with, okay? Basically is what that means. If it doesn't stay there, then the next flat line we have here is this roughly 2,500, I'm calling it, okay? 2470, 2471. Now, of course, can it get down to 21? It can. I don't see that happening. I don't see it happening unless we just have, you know, some really bad news happen. I don't see that happening. So based on what the market is doing, I'm looking at the Fed possibly not raising rates. If the Fed does not raise rates, that can cause the market to take another dive. With that being said, the Fed knows that, right? And so they may raise rates to keep that from happening. You know, it does happen. It does happen. They do look at the market and see what's going on in the market. They're not supposed to, but they do. So we're back to not knowing what's going on. November, I wasn't so sure. They did raise rates. The market seemed to take it okay, and now this big sell-off. So December is now in question. What I'm personally looking at here, let me pull this out. Our chart is really acting funny because of the zoom. Yeah, the RSI was down to 27. Now it's showing me 50, but it's because of the zoom though. This is freaking me out. Here we go. No wonder. Okay, all right. So just like that, we rebounded off of 27 back up to 34. And looks like we have the price at 56. Now we're back to 27. Okay, all right. So let's see if we actually got this thing at what price we got it at. All right, so this is not the correct price. We'll have to do our own math to see exactly where we got this at. So let's go to activity. Let's take a look. All right, so we got it right at 56.20. All right, so let's do some quick math. We got 80 shares at 60.50. And I'll put that up there for you. And we got 92 shares at 56.20. And then we're just going to add those things together. 48.40. We're going to divide by the number of shares we currently own now, right? Which is 92 plus 80, so that's 172. All right, so we currently own FAS at $58.20. And I can be happy with that. As you can see, prices is steadily going down. And again, we don't worry about trying to get it perfect, okay? That's staring at the screen and staring at the numbers to try to get it perfect is really unnecessary. We have it at 58. This thing. There we go. All right. We have it at 58, and it's recently come back from like 70. So I think we're good. And RSI, as you can see, is still at 27, even at 55, 56 now. So it hasn't moved at all, really. So we're just going to continue to monitor this. Again, December is our date for the Fed hike. Let's quickly pull that up. All right. So this is December the 19th, and it looks like we're going to have some information about the economy on the 5th. Consumer credit around the 7th. All right, that's pretty much it. Everything else is really not a whole lot. Industrial production and capacity, that's going to get looked at, but not a whole lot. So foreign exchange rates, that could be something possibly, but the beige book and the actual meeting on the 19th is what we're really looking at. So we have some time, we have some time to kind of see where things go. FAS, I don't believe it's been quite some time since it's been at this level. Let's back up and see if we can take a look here. I mean, we have to go all the way back to, what is that? November. I'll scratch that. Yeah, roughly September of 2017. This was our flat line here, right at about 59, and it has went past that. So our next stop is, who knows? We're looking at roughly 50. So my game plan, based on this chart, is not to do anything, not to buy any more shares until we have gotten down to this $49.50. I'm gonna call it $50. Okay, until we get down to $50, I'm not touching anything, because we have already broken past our line here at 59.68. Okay, that is a historical number that we have not moved past in quite some time. Let's pull it out just a little bit further. And again, you can see this kind of relatively flat period here at 41. So we have the 50, and we have this period here, right? Fairly flat period here at right around 41. Again, just like the S&P, I don't expect us to go there. Let's take a look at the dates so we can see what's really going on. So we're talking April 2017. And I'm going to go back and look at the S&P 500 as well, just to see what was going on at that time. So from December 16 to April 17, we have a relatively flat period. Now remember, this is FAS, so this would have been an uptrend. So this would have been the market doing well, okay, right here. But it was pretty much flat. It really didn't go anywhere. And remember, these are the banks, okay? This is the financial sector. So again, December 2016, April 2017, okay? And then after that, we have this roughly $50 to $51 flat line here. All right, let's take a look at the S&P. All right, December 16 to April 17. So the S&P shows a little different story, right? I would say from here to here is fairly flat, right? It's fairly flat. It has not going down much, not going up very much. And that was 23.84. So I said before that 2,500 was going to be our next stop, or 27 rather. And now if it goes below that, 25 is going to be our next stop. And after that, we're looking at yeah, looking at 25, 23. Pull this thing out further. Let's take a long look out here. I see a line stretching here from these tops to these tops. And that gives me 21. Okay, that's a line, right? Can draw a straight line across, almost straight line. And this is the benefit when you look out far, right? Because you get out of the noise. You can see what's really going on. So we see a line here, roughly a line, 21, 2200. Okay, and then we have another line here, which we already discussed, 25, and somewhat flat-ish right here, still about 25. These previous highs here before a dip and then a takeoff is 23. So I'm going to call this S&P 2700. We're there, right? Next stop, S&P 2500. I don't expect it to fall below 2500. That was March of 2018. We can call it November 2017 as well. All right. I don't expect it to go much further than that. It can, of course, it can. If we drop below 2,500 on the S&P, as far as I can tell, it's really look out below. I don't see any other point for us to really stop at other than this roughly 2,200. Like I said, this is kind of flat, but it's flat for a relatively short period of time when you're looking out, long term. See, this is February to May. It's about 3 months, right around the 2,400 range. When you look at it, this far out, it doesn't look much like a line at all. When we come into this thing, we see our 2,500 there, and we can't really see anything else on this particular chart. See, this is just straight up. That's again, 2,500. Yeah, this thing is straight up. All right, and then we have, nah, you just can't see it. You can't see it. Still, roughly 2,500. Yeah, 2,500. So are we saying that's 26 maybe? 2580? We'll say this is 26. All right. We'll say next stop is 26. After that, we're coming back down to roughly 25. That's where we are. All right. So, again, just to recap, signed out. Just to recap, we go back. All right, just to recap, we got in FAS right there, roughly, at $60.50. And we have today bought in again to take us to roughly 58. All right, so this is where we are, and so we're gonna just stay here and not do anything. until this thing gets down to our roughly $50 mark. Until then, we're just going to ride this out. We have until December. Again, if the Fed does not raise rates, it could be seen as a very bad thing to take the market lower, but it could be seen as a really good thing, saying that the Fed is going to leave the economy alone and let it grow. What that means for banks is, and I've discussed this before, that if the interest rates do not go up higher, banks will be able to make more loans. If the interest rate goes up higher, it's going to make loans much more expensive. Banks will not loan out as much. But on the flip side, they'll be able to make more money because of the interest rate hike. So again, it goes both ways, both positives and negatives. We'll have to just see what happens. At this point, it's hard to say. I would say if the Fed was making a decision today, they're probably not going to raise rates. By December 19th, who knows, right? So, from me to you, holla.